In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing a bit of selling pressure here today. Nothing too pronounced, but down on the session currently. But overall, holding a pretty tight range here the last 5 trading sessions, and we're holding the 134 handle. 134.08 in the futures market is the current price structure, so that's down slightly on the session. But I think when you look at some of the driving factors today, why we're seeing maybe a little bit of an adjustment in the curve, a couple of things. Number one, the equity markets have found the ability to at least hold on to some gains here midday. And I think that's helping to stem some of the demand possibly for, particularly in the middle of the curve when you look at the treasury markets, as we're seeing a little bit of selling pressure in the 5s, 7s, and 10s. And couple that with the Fed speak that continues to roll out pre-Jackson Hole, which is next week with the Jackson Hole Summit. With I think the Treasury markets will be very much focused on that as it comes out later next week. But currently, we continue to get some Fed speak, and there was some talk from some of the Fed officials today about GDP expectations and things of that nature, which are probably a little higher than what the market anticipated. So that could be another factor contributing to why we're seeing a little bit of selling pressure here today. Now, when you look at the yields, 10-year note yield right at 125 basis points, pretty much where it has been, as I mentioned in the last several trading sessions. And we're seeing that bump up about a basis point today so far. So nothing, again, as I mentioned, too pronounced in the changing of the yield. But the curve has shifted a little bit lower on the back end today. So that's an interesting dynamic as we're seeing, as I mentioned, selling pressure in the 5s, 7s, and 10s. So we're seeing yields bump up slightly there. But you go out to 20s and the 30s, we're seeing actually strength in those markets. And therefore, we're seeing those yields ticking a little bit lower today.